So, welcome to the Treasury Elite Leadership Series. I would like to thank all our viewers and members supporting this noble cause of Treasury Elite, whose main objective is networking, knowledge sharing, and mentoring. Time and again, we bring in world class speakers and business leaders across the world in the field of financial markets, entrepreneurship, and conduct various programs, webinars, conferences in different formats. Treasury Elite Leadership Series is one such format where we learn from industry thought leaders about their businesses, opportunities and challenges they encounter, and broad global trends they see for the future. Good afternoon, everyone. I'm Abhishek Goenka, founder and CEO, IFA Global and Treasury Elite. We bring in one-stop treasury and FX solutions for companies across India over the last 16 years. And today we have Mr. Ishpreet Gandhi. Ishpreet is the founder and managing director of Stride Ventures, and Ishpreet has built a well-diversified portfolio across consumer, fintech, logistics, agri-tech, etc. And you're doing some very exciting work in the venture debt space. Welcome, Ishpreet. How are you doing today?
Thanks, Abhishek. Good afternoon. Thanks for having me on this platform. I'm doing good. Trust all safe at your end.
Lovely. Everything is good here. Glad to have you today as a part of the Treasury Elite Leadership Series. In the next few minutes, we will love to learn from your experience and the latest trends in the venture debt space. So, Ishpreet, my first question to you. I think you started this initiative like 3 years back?
Yeah, to be precise, 2.5 years.
2.5 years back. So, I asked this question even to the young entrepreneurs, and I asked this question to the people who have spent 40, 50 years in business also. That, it is never just about the money for entrepreneurs. What keeps you excited every day to get to work? Or if I may ask, what is your why?
Well put. What is my why? So I'll Abhishek, basically just give you a quick background where I come from so that you're able to relate. I've been an ex-banker, worked with foreign and Indian banks, uh, worked across small, medium enterprises, commercial clients, large corporates. And actually, I belong to a business family, and I realized that while funding or taking care of small, medium enterprises and large corporates and all kind of clients, startups are the space which will define India in some manner going forward in the real growth of the economy. And considering the population, the consumer space, what we can potentially bring in, I've been glued to this space since 2013-14. Managed some companies on private equity backed portfolio, understanding the trends. In 2015, I took initiative within the banks to lead the venture lending book. So I remember our first company in 15-16 were the likes of Bira, Lending Card. We went to them. I wanted to convince them that we can do them, we can support them from the bank's perspective. So funded them out of the bank book, small loans to start with, working capital depending on the businesses. And that's the time when the ecosystem was also evolving. 15 was a very interesting time for venture capital ecosystem in India. And that's where actually the discussions started making sense in terms of what we can potentially do on lending. So 15, 16, 17, across a couple of banks, I led that initiative, build a potent ecosystem. And I realized that there are limitations of the banks to scale. Banks can't give everything what a startup or company's growth stage requires. And took that initiative, why don't we create our own bank for startups? With that thought in mind, we thought the best way to do it is to start a fund, create a backbone for the companies to look at lending, protect their dilutions. Because what happens, Abhishek, if I just talk about fundamental of the startup ecosystem, right? You have great founders building great businesses. You hear about unicorn stories. But all of them are building their own niche. And the best thing for them is to keep on raising equity money and keep on expanding their business. But some of the founders, some of them do not realize, because they're very good in their business, they do not understand that there are ways to protect their dilution and create an alternate financing. This is where the debt can play an important role. So rather than they being at 10% of their shareholding or 5% of their shareholding at a unicorn level, if the business is fundamentally strong, why don't you, since starting, build a mechanism in which you constantly keep on taking alternate source of capital?
So that's what I think I realized in 17 that maybe a large financial institution around it makes sense, 17, 18 types. And I came out of my assignment in 18 end from my previous bank and initiated Stride. And I think the receptivity while building something unique has been quite strong. We've been able to carve out very creative structures for founders. We build a portfolio of 25 plus companies, sanctioned close to 700 crores now, and one of the most active funds in the past 2 years in the country, to make sure that we create very innovative structures of financing. And that keeps me, what is my why? My why is to make sure that we keep on constantly innovate and create structures for these great founders who are building startup ecosystem. And you can do it in various manner. I think there are ways to structure. So there are various structures, right? You have corporates who are paying you. You do a PO financing, you acquisition financing, inventory financing, working capital. There's so many structures to do that. And that's the only thing which keeps me awake sometimes and keep on constantly thinking what's next for new companies. And I think that's where Stride will go to. We'll keep on innovating as a leading lender in this ecosystem.
Interesting. That's pretty interesting. Ishpreet, yesterday I was talking to somebody very senior in the industry, and I was very excited about this space. And he told me a very interesting thing, that the very large corporate bodies which are there in India right now, who have helped to grow India in the last, I would say, 20, 25, 30 years or 40 years. Now, the next 20 years, 30 years is going to be about global companies coming and putting money in India. Domestically, we don't have the bandwidth. It's going to be global companies. Lately, we have seen, these startups raising around $8 billion in the first 4 months of 2021. It's going to be pretty exciting for the VC and the private equity space. How do you see the venture debt industries shaping, and what kind of scale are you looking at across, assuming there are more companies going to get into this business? What kind of scale can be reached in the next 5 years?
Yeah, so I'll give you a statistic which is quite interesting for India. We are close to 3 to 4% of the market of venture capital in India. When we started, it would have been around 2.5. All of us are trying to pick the market, the active players. And globally, Abhishek, it's around 10 to 15% of the equity market. So if you see US, more mature economies, Europe is close to 8-10%. And as you rightly mentioned, if you're talking about potential $15-20 billion flow in the country on venture capital, even if you take 4-5% of that market, right, you come to a closer to a 800 million to $1 billion kind of a figure of deployment of data. That itself is huge. I think all of the suppliers currently are trying to fill that void. And considering this is only a 4-5% market, what if the economy is showing the trend similar to US in terms of tech adoption, and COVID has really accelerated? I see honestly, in terms of our circles, you'll vouch for that. We see a tremendous tech adoption in the past 14-15 months. We've not seen something like that, right? You've seen all kind of graphs of US that the tech adoption has been going like this, and suddenly it got like right? And similarly, something what you see in India now. You see a lot of our parents, our grandparents, everybody's trying to flock into the ways of using applications. So I think it's a very interesting trend there. And while considering that trend and considering that the founders are getting more privy not to dilute their businesses, and there's some great businesses in India who build without venture capital as well. And even if you're taking venture capital, how much you want to dilute, that balancing act of keeping, I think, really defines the market. So even the current trends has enough and more to cover. If those trends change further, right, there's a further potential. So you can easily we might talk about in the next 2-3 years, $1 billion, $1.5 billion kind of a market of debt in India, which can be tremendous.
Ishpreet, you just launched your second fund. First of all, congratulations. And would love to know a little bit about it, and what are the sectors and what are the kind of companies that you plan to focus through this fund?
Sure. So this is a 1,000 plus 875 crore fund, one of the largest in Southeast Asia. And the whole plan is that you remain sector agnostic. While if you see a fund one portfolio of 25 odd companies, it's been predominantly B2B commerce. It's been direct to consumer brands, agri-tech companies, right? So we had a very healthy edutech, very healthy mix of. In fact, in the last three companies, we've taken healthcare exposures, which were not announced, of close to 130 crores. We're announcing one transaction next week, right? So very healthy mix of sectors which are very critical when it comes to. So last 2 months we did three transactions in healthcare of 130 crores, as I said. And this was required for these companies to support because they were building so much of scale on ground for what we've been going through, vaccinations, things, and they're the medical supplies company. So we funded companies like Medica Bazaar, Ecnamed, and we're announcing another one which has been pivotal in the growth of medical supplies and things. So whatever the company requires, as I said, Abhishek. But ultimately, I think the trends are more towards a company which is more working capital intensive. So all the B2B commerce businesses and direct to consumer brands with agri-tech forms a core part of it. And these are the sectors. Ticket sizes, we are from the fund two, we'll be up to $10 million. We started a million going up to 10. And then we collaborate with banks to give upwards of 100 crores of exposures as well for the company. So we can really go deep in late stage companies and support them as well.
Interesting. Interesting. Ishpreet, when we talk to the global investors, what are the apprehensions that you are seeing? And what can we do about it? I was talking to somebody in Chicago 2 days back who has invested in some edtech companies.
Mm-hmm.
He was very apprehensive about the entire lockdown situation. I was talking to a client of mine just before this call, and he runs a large 2,000 crore textile company, and he was also very concerned that he's not able to export, sitting in Bangalore. What kind of apprehensions are you seeing when you go in for raising money, or there are no apprehensions at all?
So Abhishek, one thing is we are a debt fund, right? So I think the biggest apprehension, first of all, for an international investor, let's take step by step since you asked about international. I think the international investor first is looking at an economy risk, right? So whether I want to come in India at this point of time or not. So first risk is the aspect that whether I want to invest in India or not, right? It's within if that investor is active in India or want to invest in India, I think post that it becomes that what kind of product offering different funds offer. So are you an equity oriented investor or you want a fixed income investor? Do you want to sense India like a passive player who wanna understand about what's happening on tech across sectors, but as a passive investors, and can Stride be that platform who doing multiple investments across sectors to give that comprehensive knowledge to our international investor that these are the sectors and that's how they're working, right? And we've scoped 600 companies to analyze to come to 25 companies of ours. So how much of tier one investors and the top investors in the country, how comprehensive we'll be working with them with that 20 plus team to derive those opportunities. So that give them a passive understanding of the market in the country. And then you're trying to invest in the best of the companies of those best funds. So you're literally trying to pick the jewels out of that through a credit assessment and invest. So look, it's ultimately if the investor wants to understand this as a passive fixed income way, that appetite, or it's the investor really wants to be an active in a particular sector and want to go long in that sector, and that kind of mindset. So depends on case to case. We have all kind of investors, right? So for example, we do have right to invest in our companies. So if an investor, for example, want to invest in B2B commerce or agri-tech, so they have an opportunity to participate directly in our portfolio companies in their newer equity rounds. That kind of right to invest we do take. So
Right.
I think every investor brings in a very different scope of lens, whether it's coming from GCC, Singapore, US, their mind space towards India. And within that, what kind of scope of lens they come from. They want to be passive or an active investor of directly investing into companies. That's what defines it. Sector-wise, to be honest, I think we see a lot of interest in healthcare. I think we've realized that healthcare is comparatively broken than other countries, right? There's a lot of things to do. I see a lot of international investors talking about that. So that's why our portfolio has been shaping up in a manner in which it's quite conducive to today's environment, plus very scalable for these companies, the way we are building it. And similarly, some of the other sectors, I think you have edtech having a flavor in the past, might be overvalued comparatively, right? While and how tech has integrated, is it that the men will get differentiated from boys in this kind of sector because you have 2 3 large players who are very well funded, right, and very comprehensively positioned, then some of the earlier companies who might not get funded. So I think that there are questions there, but medium term, long term, you see a very different trend. Private equity firms who never invested in EBITDA negative companies have started showing interest in venture capital backed companies. So because the financial markets is also overvalued. As you are a treasury guy, you know better than me, right? So because the financial markets is slightly overvalued, people, private equity funds, and good large chunks of money are coming to venture capital backed companies and providing them an exit, which was never a case. You're seeing IPO kind of discussions happening for Indian venture capital ecosystem. These are mature signs, right? These are mature signs of the economy, are giving confidence to a lot of things. I think if the macro stability remains, there's a lot of interest which we see in a positive scenario. As I said, if the COVID aspect is further, say, in a more muted manner, gets settled down over a period of time, you see a lot of interesting things. What happened from Jan to March can be more sustainable if the macro environments are more.
So tell us more about the traits. Of course, you have your credit checks, your systems and balances. You've been a banker, but I'm talking about the behavioral traits. Do you see that, and what kind of things that you see while shortlisting these companies?
Look, Abhishek, ultimately, I think how we look at Stride is to pick industry leaders and back them with various financing structures so that they can scale. They build the business and we build financing for them. Whether it's giving on-balance sheet debt, trying to make them understand how the debt is scalable, off-balance sheet for the suppliers, finance. So creating an entire financial conducive ecosystem for them as they build it, right? So we typically want to support industry leaders. So if you see our portfolio companies across healthcare, D2C, B2B, we have Infra.Market and ZTworks of the world on B2B, which are the largest B2B players amongst Mizongo. All three of them, Bulk MRO doing exceptionally well, or B2B good guys we've tried subscribing to, and similarly D2C. So I think we pick industry leaders and support them fully and say we'll back with our banks and we'll keep on augmenting as you keep on augmenting. As you keep on building your business, we'll keep on increase your financing position on working capital so that at least that portion of financing or at that portion of capital, you're not diluting for equity. So it's a very interesting way to engage with founders because I think first discussion of ours is to first of all understand in a very comprehensive manner about the business before we come to a solution. What solution comes up. And then the solution is that kind of solution which is more of partner oriented. That's why you're able to curate. So it's a very thorough credit assessments, as I said in the starting, followed by a lot of checks, balances, and then telling them that look, you're creating a credit track record for yourself and you're building now an IPO-able business. So if you're doing all of that, let's be your real partners, keep on getting banks and keep on scaling. So that's how we look at every company, every sector.
What's very much in the vogue, a lot of companies are also looking at it from India. Do you think it's sustainable? What do you think about it?
Actually, I've been following SPACs for like 6-8 months now. I think 2020 one has been a great year so far comparatively to 2020 itself. You have a couple of Indians being at the helm of US SPACs and really trying to take them. Indian and Sri Lankan, so I should not miss one guy who's very active there. And look, I believe Abhishek, it's. I think you mentioned somewhere there's a lot of liquidity, right? And there are certain things which are driven with liquidity. Is the structure okay? Sounds okay. Pass test. Does it? It has been made viable. A lot of companies have been looking at it actively. But is it? The problem is it the way people see that the only form to get liquidity because it's available cheap is the worry for me. So I have started hearing a lot of companies who think that they would not be able to get that valuation or that kind of money what they want here or some other country. And they think SPAC is the easiest ways to do it. That's where the concern is. Would it continue? It can continue for sure. I think there can be market for that. But in that manner, in that liquidity, I have my doubts there. It has to be sustainable is my only point. Moment 3 companies do it and they fail, because of the fact that that was the only liquidity option available. I think that's where the concerns will start coming in more. So everything looks
Correct.
rosy right now because you are up the trend and you are trying to, people who never knew about it, just trying to know them, and people who think they missed the tech story are getting subscribed to them. A lot of things happening there. Liquidity is there. Financial markets they want to be away with. So as I said, I see quite interesting different thoughts. But my personal thought is that can remain to an extent in which it's not stretched in a manner in which it gets burst. So I think
Insights, and you're doing a wonderful job for a lot of these startups. Uh, Venture debt is a great opportunity for them to maintain their stakes and not to dilute their equity in the beginning and have an informed decision while they're scaling it up. Otherwise, some of the people, as Narayan Murthy once said, that don't sell yourself cheap in the beginning. And I think that's one of the needs that you are trying to fulfill. And with your second fund, I'm sure that the need is there in the market. People are realizing it. Large family offices are participating, global institutions are participating, banks would be comfortable. And the best is the startup community is definitely going to be benefited. So I think it's a phenomenal thing that you guys are doing. I wish you all the very best. And with this, thank you to participate in this lovely show.